My name is Djerriwarrh, General Manager of Business Development and Investor Relations for Djerriwarrh Investments. I have with me Mark Freeman, who's the CEO and Managing Director, and Brett McNeill, who's a Portfolio Manager for Djerriwarrh. So I'll throw to you, Mark. We've just announced our results for financial year 23-24. Could you perhaps just take us through some of the highlights?
Yeah, so I'll touch on some of the highlights and then I'll pass over to Brett to talk more broadly about the portfolio.
Excellent.
The net operating result, which excludes the impact of open option positions and is considered a better measure of the company's income from its investment activities, was $40.3 million. The figure for the corresponding period last year was $39 million. Key components of the result were: income from investments was $36.8 million, up from $35.7 million last year, and income from option activity was $16.6 million, well ahead of the corresponding period last year of $14.8 million. The final dividend has been increased to 8 cents per share fully franked, up from 7.75 cents per share fully franked for the same period last year. Therefore, total dividends for the year were 15.25 cents per share. Last financial year, total dividends were 15 cents per share fully franked. Based on the final dividend declared and the interim dividend paid, the dividend yield on the current net asset backing is around 6.5%, grossed up for franking credits. Based on the net asset backing and including franking, this represents an enhanced yield of 1.8%, higher than the S&P ASX 200 index. The management expense ratio remains low for this type of product at 0.42% with no additional costs.
Thanks, Mark. So Brett, Mark talked about the enhanced yield within the portfolio, particularly relating to how the option activity was undertaken through the year. Perhaps you could just take us through why the portfolio did so well, and particularly around what option activity you undertook through the year.
Sure, thanks Jeff. And what was really pleasing is that Djerriwarrh was able to deliver a good balance of capital growth and the enhanced yield that Mark mentioned. So a net total return for the year of 13.6%, just ahead of the benchmark index of 13.5%, both grossed up for franking, and the dividend yield of 6.5%, but also some really good capital growth. So meeting the objectives of Djerriwarrh again. In terms of contributions and how we delivered the returns, the bank stocks were the standout performers for us, particularly National Australia Bank, Westpac and Commonwealth, and that was really pleasing because we've been big buyers of the banks 12 to 15 months ago, and they've delivered some terrific returns over the last financial year. So they were the major contributor, but also some other big holdings in the Djerriwarrh portfolio performed very well, such as Wesfarmers, JB Hi-Fi and Macquarie Group.
Thanks, Brett. So within the context of the strong market and the option activity that was undertaken, what adjustments did you actually make to the portfolio through the year?
Yeah, look, most of the portfolio adjustments were a result of our option activities. So whilst the call option writing activities generated a significant amount of option income, they also resulted in us selling a large amount of stock as a result of option exercises. And this was particularly the case for the strongest performing stocks, unsurprisingly the banks. So now we own a lot less of Commonwealth, National and Westpac as we did 12 months ago. So significant option exercises there resulted in selling, also in other strong performing stocks. And we've talked about Wesfarmers and JB Hi-Fi, but it was also a feature for our holdings in Goodman Group, Car Sales and James Hardie. So that was the selling. On the buying side, the biggest purchase for the portfolio that we've done by a long way has been Telstra, and that's now one of the largest stocks in the Djerriwarrh portfolio. And we've also added significantly to our holdings in Woodside Energy, as well as Woolworths. And we think these three stocks are all very high quality, large cap, blue chip stocks, each offering a very attractive fully franked dividend yield. Lately though, we've been a lot quieter on the buying side. So we're struggling to find value in the market and we've just been a lot more patient and selective in our buying from here.
Thanks, Brett. So Mark, going forward, Brett touched on the sort of the strength of the market and the valuations that are currently in place in the market, which are quite high for a number of stocks. What's sort of the outlook as you see it going the next 6 to 12 months?
Yeah, and as per usual, we don't try and predict the markets, but you can observe some characteristics. For example, if you look at the overall market, either price to sales or price to book, the market's certainly at an elevated level. We're going into a period of time where you do get some volatility in markets traditionally, certainly around that September-October period. There's a lot of events occurring in the world. We're about to go into reporting season. So we're just being a bit patient at the moment. We certainly know some of the stocks we want to buy, but should we see any pullbacks in the market, we'll certainly be ready to buy and start to rebuild the Djerriwarrh portfolio after a number of exercises that have occurred. But when I look through the Djerriwarrh portfolio, I get great comfort that we're holding great companies. As Brett touched on, to have that performance where you're meeting the market, yet where you're providing that enhanced, fully franked dividend yields, it's hitting all the objectives that we set out for. We do note, and we do publish every month, that the stock is trading at a bit of a discount, which is surprising. It's a bit of a theme going through the market at the moment with listed investment companies, but certainly when you look at the dividends we're paying, if you do that on the share price rather than the NTA, they're quite substantial compared to the yield you would get on being in the broader market. So that's something we're sort of noting quite significantly at the moment, is that discount. But the portfolio's in great shape, and as I said, we'll go through reporting season, and I'm sure we'll get more opportunities to rebuild some of the quality stocks we're looking to add.
Okay, thank you, Mark, and thank you, Brett, for your time.